I put it to Jerry Wattenberg, Managing Director of JTW International, that we've reached a turning point.
Well, there is a case to be made that is at an inflection point. The dollar turnaround, I think, was substantial in the market and not really priced in or expected by anybody. And I think the slowdown in Europe also is not expected. Although the high oil prices, I think, were a little bit lofty and could have had a correction, I think this multiple-day correction and multiple-week correction, I think, has given the markets a little bit of breathing room to start to look at other aspects of the global economy. And when you have declining oil prices and declining, economies, I think that leads all roads back to, well, let's see if we've got a new horizon ahead of us.
Well, certainly one of the things that's striking is, from what you're saying, that actually it's rather hard to chart what's going on here. And we could see oil prices go back up again. Who knows? Well,
I think that's a very good point. The market is very, very cautious about taking long-term bets at this point in time. I mean, you're seeing the dollar turn around by its greatest, percentage movements in many, many years, and the pound having its, worst week in about 20 years. So because of that, the market is moving very quickly, very fast, very aggressively, and it could easily turn around and snap back. So I think people are keeping their positions light.
Well, this leads us to the central banks, because they're in this dilemma. You've got stagnant economies at the same time as high inflation. They don't know what to do, whether to sit on their hands, whether to worry about the recession or whether to worry about the inflation. Well, how does this change things?
You're right. It's a rock and a hard place. I think specifically if you look in the UK, where the economy is slowing down and certainly, heading closer to a recession, but yet sticky inflation prices mean that really they can't cut rates. So they're in a dilemma because they need to cut rates to stimulate the economy, but yet they can't do so for inflation. So the longer they don't cut rates, the worse the economy will get. So by the time they get around to doing it by the inflation moderating, I think the economy will be suffering.
It sounds as if the best bet then, actually, for the Fed, for the ECB and for the Bank of England is that we're going to see rates on hold for some months.
Well, I think that is a definite point, and you have to understand that the expectations, especially in Europe, was that the rates would go higher, and that certainly, that was a turnaround which has really taken the wind out of the sails of the euro, which has caused it to go down dramatically this past weeks.
Finally, Jerry, the stock markets. Does it again look as if we're essentially heading towards, well, a period of flatness, at least for some months?
I think we're going to see flatness, I think, until we get through the next round of earnings seasons, and probably looking towards the end of 2008, where you get some degree of clarity of if companies are certainly starting to improve their situation. The important thing to understand is that there's been so much bad news, specifically in the U.S. and certainly on financials, that, it's hard to see it getting much worse. So you're not at the end of this game, but you're certainly probably 70 or 80% through it.
JTW International's Jerry Wattenberg.